In today's video, I'm just going to show you the most simple representation of a market maker sell model. So if you want to learn how to do this, then keep on watching. Okay guys, so in here we have the GBP USD 1 hour chart, and as you can see I have a bunch of vertical lines and horizontal lines. If you've watched my bias video that I've made a couple months ago, you'll see that deciphering the market bias is the most important thing that one needs to do. If you haven't, then it's going to be linked somewhere in the description down below. Make sure to watch it. In today's video, we're going to focus on identifying when a market maker buy model or a market maker sell model is being played. If we were to look at the vertical lines, it's pretty easy to see that the thinner vertical lines are basically daily dividers and the thicker vertical lines are weekly dividers. In here, we can see that I haven't updated my GBP USD chart for some time now. It's mainly because I've been away from my charts lately. But I figured that since I'm back from vacation, why not do this with you guys so that I can show you what is my normal process of doing this. And you'll see that it is very, very simple. So I'm just taking a vertical line, which is a thicker line, and considering that this day in here was Monday, and this is Tuesday, Wednesday, Thursday, Friday, then I'm going to place this thick vertical line at the end of Friday and the beginning of Monday, and that's going to be my weekly divider. And then I'm just going to take this line and just move it 5 days more to the right side of the chart, and that's how I'm delineating 1 week of price action. I do have an indicator that marks the beginning of the day at 12 a.m. New York. If you want that, just make sure to write to me on Telegram and I will gladly send it to you. Before we continue, I want to take a few seconds and thank Hanko Trade for sponsoring this video. They have a great variety of accounts, starting with standard accounts, ECN accounts, ECN Plus, and also Islamic accounts. They have a minimum spread. It starts from 0 pips. They have a max leverage of 500, smallest commission in the market, $2 per one standard lot. They have a 100% matching bonus promotion. Click the link below in the description, sign up for an account with Hanko Trade. They have an excellent customer service. Once you deposit at least $100, they are going to match that with a 100% deposit. Now, if we were to look at the price action that happened here previously when the market was going up, we can easily see that it was breaking highs, daily highs, weekly highs, more often than it was breaking daily lows. Yes, we did have some periods of time when we did break daily lows, like in here, for example, we did break 2 daily lows, but then it starts to break daily highs and then continues to break more weekly highs again. And then we can see that for the next week, we didn't really have significant breaks of daily lows other than this one, which does not have the power all by itself to change your bias to the downside. After this, we can see that the market started to have like a little cool down period where we did go for some of the liquidity that was accumulated below these lows over here. When these liquidity price points are taken out, what we need to do is we need to get rid of them from our charts, right? Just mark them as broken market structures, because essentially this is your job as a trader, is basically to observe what price action is doing. How is it relating to daily highs and lows, weekly highs and lows? Which direction are those respected and which direction are those broken? And this is basically what defines your market bias, right? This is what tells you, okay, today I want to be a buyer or today I want to be a seller. When we come to our trading charts and we see that we have liquidity being accumulated below previous daily lows, and that right now the market starts to break more daily lows than it's breaking daily highs. So in here we can clearly see that not only that we are breaking current daily lows that are being created, but we're also going for the daily lows that the market accumulated liquidity below during the previous bullish market cycle. When we're looking at the market with this kind of approach, we can see that once the market was going up, it was breaking structures to the upside accumulating liquidity below the lows. So because this is a financial market, guys, what do you think the price is going to go after? It's going to go after where the money is, which is basically liquidity, which is basically the market structures that were respected during the previous bullish market cycle. And right now, along with the current bearish market cycle, which has established itself, then we are going to start aiming for as much as possible of the sell side liquidity that was accumulated below daily lows and weekly lows previously. Okay? Will the market go all the way till the lowest low that was formed before the bullish market cycle began? It might not. It's not your job to decide till where the market is going to go. It's your job to decide what is it doing right now. You do not know how many pips is going to drop or how many pips is going to go up. Your job is to just see what is it doing now. Is it going up? Is it going down? Find the best moment and the best price to enter. Make sure you're going to have a stop loss that is loose enough in order for you not to be taken out, and just make sure that you're going to start taking incremental profits every 10 pips or so. Okay? If you're following ICT, and if ICT has been your mentor so far, you have absolutely no reason not to take profits every 10 pips. Because if your mentor is doing this, then why shouldn't you do it? Especially if you are doing challenge accounts, if you want to get funded, you have absolutely no reason not to bag that profit. Leave 10%, 20% of it as a runner. That can go for more. That is just going to build up your confidence in your ability to see setups, in your ability to trade. But the thing that is going to build your equity is just going to be taking partial profits every 10 pips. And yes, we're talking about 80-90% of your trade needs to be taken at every 10, 12 pips or so. Okay, if you're trading gold or other volatile assets like US 30 or stuff like that, then yes, you can extend or expand that partial take profit level to 20 pips. But if you're sticking to Forex pairs, 10 pips is maximum stretch for one setup. Market maker sell model, we can see the market going up, breaking daily highs, accumulating liquidity below the lows. Once we start seeing the market establishing into a bearish fashion, breaking more daily lows and weekly lows, and respecting more daily highs and weekly highs, then we know that right now is just going to most likely aim for the sell side liquidity that was accumulated below previous daily lows and weekly lows during the previous bullish market cycle. And this is how market maker sell model is formed. We have the buy side of the curve, and then we have the sell side of the curve. Okay, and here we can see the market telling us that, hey, I want to go lower. And then with this huge move to the upside, it just takes out all those early sellers. Where will they have their stop losses? It's pretty easy to see. They're going to have their stop losses above these levels. Does the market go above those levels, takes out those early sellers? Yes, it does. And then it's doing what? Slowly but surely, so that no one really notices what is going on. The market is just going to start building its way down towards the sell side liquidity. We are also going to see here and there, we're going to see explosive moves to the upside, again pretending as if it's breaking market structures, not enough to change your market bias, and then it's just going to continue moving lower. And here again we have the market having an explosive move to the upside. We have a lot of buyers entering the price. Where are they going to have their stop losses? Their stop losses are going to be there. Market goes a little bit in their favor, and now people like you who want to aim for hundreds of pips in one trade, they're going to start saying, oh, I don't want to take profit because the market is going to go here to cover for that fair value gap, or the market is going to go there to take out that liquidity. That's not going to happen. Okay, that's not going to happen. You've been just played out by smart money, which puts you on the position of being a dumb money. And then the market starts to go lower, again, aiming for other points of liquidity that it just recently created. So right now, you have absolutely no reason to buy GBP USD. Will it go up, change the market bias altogether, and then start to build up positions so that it will now go for the buy side liquidity that was accumulated above these daily highs and weekly highs during this bearish market cycle, yes, it might do that. But it's not your job to know when it's going to start going up from down here at the bottom. Okay? It's not your job. Your job is to wait for smart money to show you the path. Allow price to break enough market structures to the upside so that it will confirm to you that now you have a bullish market cycle developing, and then you will have a lot more confidence to enter trades, scale up your positions, and aim for those buy side liquidity areas resting above price. I really hope this has been insightful for you guys. If you have any questions, make sure to comment down below. I do my best to answer all questions that I receive. Make sure to also join our Telegram channel. You'll find all the links in the description down below. Until next time, make sure to keep it simple.